a rented Lamborghini Aventador, a $5,000 a night penthouse suite, and a 22-year-old internet guru telling you that a simple chart pattern can make you $10,000 a day on complete autopilot. Across YouTube, Instagram, and Telegram, the get-rich-quick forex and options industry has scaled into a multi-million-dollar machine. It is built entirely on envy, specifically engineered to target your financial desperation. They say they don't want your money. They don't sell expensive courses anymore. They just say, join my free Telegram channel, copy my exact daily signals, and let your money stack. It sounds like ultimate digital charity. But underneath the luxury watches lies a deeply calculated trap. Tonight, we are pulling back the curtain on the fake guru industrial complex. We will expose the dark physics of the broker kickback model, the truth behind fake win rates, and how the modern prop firm revolution became a rigged casino where the house never loses. Welcome back to Behind the Scam. To understand how these creators pull millions out of the market while their followers go completely broke, you have to look at the hidden back end of online forex brokerages. Legitimate brokers pass your trades directly to the real global market. This is an A-book model. But the sketchy offshore brokers pushed by social media creators run on a B-book model. It starts with a dream. High-end cars, a designer lifestyle, and a pitch telling you that trading is your ticket to ultimate financial freedom. But watch what happens when someone asks a real uncomfortable question. The moment a podcaster brings up price manipulation and the sketchy reality of his broker, the entire mask slips. See how this operation actually works. They build their own brokers and prop firms where the game is rigged from the start. If you follow their low risk to reward strategies, you lose. He stacked a massive fortune using affiliate referral links. Then he decided to cut out the middleman entirely to open his own broker and prop firm, proving they make their real money from your losses, not from trading the markets. Legitimate financial data proves that 97% of retail day traders lose their money if they stick with it for more than 300 days. These creators don't need to be trading geniuses. They know, mathematically, that if they send you an offshore sign-up link or funnel you into their own platforms, you will eventually lose your money and they will collect a massive check. But if these creators rely entirely on their audience losing money behind the scenes, how do they maintain a pristine reputation on public social media? How do they constantly claim a 95% win rate in their chat groups? Welcome to the art of psychological manipulation. This is what investigators call a truth sandwich, mixed with authority bias. By appearing on mainstream corporate news outlets, an influencer builds instant institutional trust. They use that trust to give completely standard, safe financial advice on their main page before funneling you into dangerous, high-leverage exchange links in their bio. If the trust sandwich doesn't work, they deploy manufactured expertise.
Stop loss below this level. Looking for a nice push to the upside on price.
They fire a relentless wall of pseudo-technical jargon to overwhelm your brain. It sounds like a hacker in a spy movie trying to bypass a firewall, but it is pure performance theater. It's designed to make you think trading is an elite, hyper-complex skill you can only unlock if you buy their mentorship or join their group. They hide the reality. They are setting ambiguous, multiple profit targets. When the price violently reverses, they simply lie and say the highest target was hit. It's a complete smokescreen to screen grab a fake 100% win rate for social media before deleting the structural wreckage of your blown account. There is a famous lesson in history. There is far more money to be made selling shovels in a gold rush than there is actually mining for gold. And the receipts in this industry prove it. When confronted point blank about his wealth, I have to admit I made a staggering $7.5 million in just 4 years. Not from trading, but from selling online courses. I have to admit something. I made $7.5 million in 4 years, but not from trading. I made it selling courses. The hunger for revenue is so aggressive that these platforms bypass legal restrictions.
Forex regulations mandate you must be 18 to trade. Yet Alex's website openly suggested that minors could simply set up accounts while these high-profile gurus brought in massive profits from course fees. The reality for everyday people can be devastating. Take, for instance, a deeply unfortunate case where an individual trusted a close associate to manage their entire life savings.
Hard copy checks cut and took it out of my mailbox.
Yeah, he stole.
Obviously, I would never take out.
He's a criminal. He's a crook. Listen, you have to set that down. Here's why. Your emotional reactivity is going to color what you do next.
Okay, Okay.
and you have to go into this next season.
That friend blew over $600,000 of her retirement fund day trading. It wasn't an investment strategy, it was financial suicide. Poor money management and fake dream peddling destroy real lives. If you want to talk about who actually makes consistent, suspicious money picking individual stocks, look at the halls of power. US lawmakers are legally permitted to invest in the very companies their committees oversee. The suspicious returns that politicians generate using non-public information are the exact fantasy returns these day trading gurus promise you'll get if you buy their WAP accelerators. As internet audiences grew more skeptical, they started demanding undeniable proof. They demanded to see real bank payouts. And that is exactly when the fake guru complex deployed its ultimate weapon, the prop firm Cartel. They tell you,
today we are taking a max payout of $10,000 out of Lucid Trading. And if you guys have not traded with prop firms before, you guys are missing out on some serious money.
and our firm will fund you with $100,000 of our corporate capital. They show massive 5- and 6-figure payouts as absolute proof. But do not fall for it. It is a completely fabricated illusion. In the vast majority of modern retail prop firms, there is no real capital. They do not use real money accounts. They issue fake simulated trading platforms using monopoly money. The entire business model relies entirely on challenge failure fees. Because of aggressive, highly restrictive rules, over 95% of traders fail. The firm takes those millions in failed entry fees and uses them to pay out the tiny fraction of people who pass. This creates a toxic, hidden conflict of interest. Gurus pretend to be independent traders teaching you how to win, while actively promoting platforms that mathematically succeed the more their own students fail. To protect themselves, they hide a standard federal disclosure in their descriptions, CFTC 4.41. It's a mandatory disclaimer revealing that their trades are completely simulated. If they spoke plainly and said, "I'm playing with a demo account and I make my money off your losses," their empire would collapse overnight. This brings us to the ultimate ironclad rule of the financial world, the absolute acid test that instantly ruins 99.9% of all trading influencers. But ask yourself this: if these gurus are making millions directly from their trading strategies, why do they completely hide their long-term broker statements? The only thing funnier than a fake guru flaunting massive wealth is the ones who only start doing it after they become popular online and have been selling courses for a while. That is where the money actually comes from. Take ICT for example. He lived in a cheap townhouse before running the mentorships that made him millions. And now he flaunts a massive house, Corvettes, and RVs. If they aren't hiding their past, they are actively faking their live streams. Gurus reject transparent streaming because it shatters the illusion. Many of these creators trade on simulation accounts while carefully hiding the running balance or portraying it as live capital. There have even been instances on live streams where online educators were exposed for using trial demo accounts while publicly claiming real money gains. Even a MetaTrader mobile screen recording can be fabricated.
Create some insane numbers. He's got like $2.4 million in there, but you can put in any amount. And look at this. So he just put in some amount of money. Look at this. He'll go back to his phone, and bam. But it's like a $1 million deposit into the account.
One can buy or set up their own private server to completely manipulate trading history. Figures in the trading community have faced scrutiny after posting withdrawal proofs that contained obvious formatting errors. They can inject simulated deposits, generate massive artificial balances, or digitally alter a withdrawal notice. What you are looking at is an industrial-scale marketing iceberg. It's a lead funnel. They give you a microscopic glimpse of a concept, claiming the paid product covers the rest in depth. Look at these channels. Their paid communities pull in thousands of members, generating millions in pure revenue from beginners paying to learn basic indicators. If their strategy was truly the only guide you'll ever need, why do they remake and re-upload variations of the exact same video dozens of times over 4 years? Because they need a continuous conveyor belt of fresh beginners to feed the course funnel. It gets worse. Those free live webinars they run multiple times a week to close sales? And if you think you can trust platforms like Trustpilot to verify them, think again. Gurus systematically manipulate their review scores by offering rewards, discount codes, or free indicators to users who leave immediate 5-star reviews the second a negative 1-star review surfaces, burying the warnings under a wall of paid positivity. We've unmasked their pseudo-technical jargon, exposed the simulated prop firm rings, and shown you why they run from real audits. Now, I want to step completely away from their theater. I have spent my time in the trenches of actual live trading. No rented Lamborghinis, no offshore broker referral links, just cold, transparent data. Here is the reality check that every single one of these creators is terrified you will calculate. In real-world trading, making a consistent, disciplined 2% to 5% return a month is an absolute legendary achievement. Let's look at the absolute titans of institutional finance.
One of the most important things I learned in my journey in interviewing traders and being in trading was that it's really risk management first and foremost. You may think it's boring, you may not think it's what you're interested in, but it's the most important element. If you don't have that, you don't have anything.
Multi-billion-dollar hedge funds backed by supercomputers, high-frequency algorithms, and elite math PhDs aim for roughly 15% to 20% a year. Think about the mathematics. If the largest funds on Wall Street cannot guarantee a double-digit daily return, how is an influencer on TikTok promising you a lifestyle cheat code through a free Telegram link? They aren't beating the global financial markets, they are just out-marketing you. Real trading proficiency cannot be bought in a WAP accelerator or a recycled course. Unless you are running a fully automated algorithmic infrastructure, your edge comes entirely down to manual risk discretion, and discretion cannot be taught in a pre-recorded video list. Building wealth is a slow, boring, disciplined process of managing risk over time, not a shortcut out of hard work. If you want to build true stability, focus on expanding your actual career, chasing promotions, and becoming an intentional spender who lives below your means. Stop funding their luxury lifestyles with your desperation. In regular life, we assume innocent until proven guilty. In the trading industry, you must assume guilty until proven innocent by a third-party audited statement. Unfollow the fake gurus. Stay safe out there, and we'll see you in the next investigation.